What's going on, traders? Welcome to it. Another edition of Stock Market Movers, our latest show and the show that's growing the most here. Let's get after it. Take a look at the topics that we got into today. We're going to talk about the stocks bouncing on a hot CPI. Now what for the Fed? What do they do? We'll talk a little bit about that. Tonal and Peloton in the news, Unity, Fastenal, Delta, Twitter. We'll also talk a little bit about Three Arrows Capital in the crypto situation. We got experts like always. We're going to get into that. Our experts today, Patrick Galley, and also we got Tom Donnelly. Stay tuned, guys. We got a great show for you guys. Let's dive on into today's topic. A lot to talk about. Let's go ahead and welcome to Stock Market Movers with none other than your host, Money Mitch.
It's time for Money Making Mitch. When investors need a story, we're going to the moon. Welcome to Money Mitch, where story is everything. I'm here to find you the next opportunity. It's all about the green hands. Now we all know the bull market is here to stay. Money Mitch.
What's going on, traders on out there? How's everything going? Let's go ahead. Let's start diving on in. All right, let's go. Let's get into the topics into today. I've got a lot to talk about, and of course, a lot still going on to my right. So I'm going to try to ignore the slack here. I'm going to try to go ahead and tune in for you guys. Let's dive on in like we normally do. First thing to note is stocks are actually up on this hot CPI data. And we'll talk a little bit about that. I think you're going to see everywhere that everyone's talking about how they're down, but really what I refer to is from the open. And I think that's more important than anything that we're trying to pay attention to just overall. It's from the open, what happened, right? Because in the pre-market, there's just illiquidity. And with that illiquidity there, a lot of times you're going to get those volatile moves up and down. But actually from the open, we've actually been doing well here. I'll actually show you guys that. I'll bring up my screen here so you guys can see the SPY action. You see how we came on down here in the pre-market, but essentially since about 8:45, we started to come back up. And you can really tell here from the change from the open daily. This is what I pay attention to really often. And because you could get often where you get this down gap, right? Like you saw technology down gap here, and it started the day pretty down. But the biggest thing you got to kind of watch is when you get those swings back on up, right? The change from the open is going to be important. Now you're seeing technology really kind of lead us back up. You can watch this also with the Qs, right? You can see how the Qs were down there. And then what do we do right at the open? Boom, we start bouncing back. So this is the part that gets interesting, why we are up, and the real question that we're starting to ask. But of course, what happened today? We did get CPI, right? So consumer price index coming in, increasing 9.1 from a year ago in June, above the 8.8 Dow Jones estimate that we were watching there. So the question is, from now, what happens, right? What can the Fed do? The numbers seem to counter the narrative that inflation may be peaking. A lot of this, I've talked about it right here on Stock Market Movers and my other show, is that I just feel like the data was taken in the first 2 weeks. And in the first 2 weeks, we weren't seeing that topping of the oil charts. But recently we have. And so, of course, we're going to continue to watch what happens on the next CPI, but that's ways away from now, right? And so the real question now comes to the pressure to the Fed. What does the Fed do next? Of course, you're going to start seeing mentions, and I talked about it on pre-market prep, and I talked about it on live trading, that you'll see the mentions now of 100 basis points maybe being brought up, right? At one point, 75 basis points, you guys would have slapped me across the face. I remember the first time I mentioned 75 basis points to Spencer, Joel, and Dennis, and they looked at me like I was crazy. And now we've been talking about even higher than that. There was a point that, yes, 3/4 of a point hike rate was unheard of. It hadn't happened too often in history. Now we're talking about a full 100 basis point hike rate. This is something to definitely keep on watch and something that's going to be affecting the stock market. Why do I feel the stock market could come down? Is because of that. I do think that the Fed is going to have to really show their face here because they're really handcuffed on trying to figure out what's going on in inflation. And at least from what they have done, it hasn't shown up in the lagging data. So we'll have to see, right? They're data dependent. And at least from right here, it isn't showing us that inflation is topping out. So they might have to hike up those horses and get real hawkish on us. So we'll see what happens in the environment, what comes out of this. Does the Fed determine to do 75 basis points, 100, a 50 point? Of course, I think this is what everyone's going to keep on watch to find out what the next move is in the overall market. Is this a rally to sell into? A little part of me thinks that it is a rally to sell into, but like always, who knows? No one knows. Definitely smash the like on up, guys. Let's go ahead. Let's keep this going here. Do want to get my stream deck going here. I didn't connect it, so let me get that connected right quick here. All right, guys, do me the favor. Let's go ahead, like on up the stream. We've been dropping in our likes, so I need to do a favor and ask you guys to smash that on up if you guys appreciate me going into what I feel the Fed will do next and what are the options really, right? Let me catch the comments in the chat. What do you guys think is going to happen? Throw up in the chat. Do you think it's 50 basis points? Do you think it's 100? Do you think it's 75? I want to know what you guys have to say in the chat. So definitely smash the thumbs on up and let me know. I'll go ahead and pay attention to see those numbers come on in. All right, let's keep it going here. All right, let's take a look at what else is moving out there. Of course, now the pressure falls on the Fed, but let's take a look at what was hot and what was not today. That's what I always like to do, a little sector and industry analysis. Let's go ahead, let's dive on in and see what was moving today. So if you guys take a look here, what are you going to see? At least I always leave mine up on the open, the percentage change from the open. I do not care about the overall change. I normally compare that to the percentage at the open, but use that as more of a comparison than to tell me if it's up or not. The change from the open is what matters for me. Consumer cyclical sector really kind of leading us today. You can see it here. It's trying to get back to that high that it drove around the 11:15, 11:30 timing here. A lot of this being led by specialty retailers, auto manufacturing, and footwear and accessories. So we can always work backwards here. So consumer cyclical, you could take a look at some specialty retailers. Names like Box D was doing well. Chewy was doing well. These are stocks that especially Chewy. I like the longer term chart right now. But even a stock like GME doing well today that's in this. And so you guys can watch this. It's up there now to 141. And it could, continue having some other stocks kind of run with it. Look at that AMC pushing. I've talked about the 15 level. We were talking about that yesterday. What happens today again? Boom, 1030 bottom on AMC, right at that 15 level. And you're right back up there towards 1580s. We'll see if we get to 16 today in that name. If you guys didn't catch yesterday, we talked a lot with Matt Kors on AMC. So we'll see what happens in this one. Basic materials also having a good time right now. We can take a look at some of those. I forgot to put the banner up there for the consumer cyclical, but let's get into energy and basic materials. These were interesting also as we started seeing basic materials start taking lead in silver, coal, and gold. Why are these up today? I would think that these are getting a lift as the dollar index is taking a little bit of a pause on the recent rally. Of course, a weaker dollar, and I think you start seeing silver and gold start taking a little lift on up. But if the dollar continues to strength, I think this trade will also get turned back around. So keep these on your radar. We'll see what happens there, and let's keep going here. Let's get into the first actual headline of the day, which it really comes out of Nike. I want to talk about Nike. It's really strong right now. You can see it, guys. It's trying to hold that 105. let's talk about what happened in Nike today. So Nike's making a strategic change with Fanatics. We've seen Fanatics really start stepping up, right? Fanatics, a sports commerce platform that is entering a long-term partnership here with Nike to manufacture collegiate sport fan apparel. I think this is very important because we know the relationships that Nike has with a lot of the schools. If you take a look, Nike and Jordan outfitted 48 teams of the most recent NCAA basketball tournament. So this is the highest total ever. I think this is an important thing for Fanatics to continue into their sports, conference platform. They need access to these kind of universities. So they decided to go with a partnership with Nike. And I don't blame Nike on doing it too. Fanatics has definitely been pushing on their growth. All right, let's continue going. Layoffs continuing as Peloton's competitor. Let's take a look at Peloton right now, PTON. It's trying to come back. We heard earlier this week that they were going to move towards a third-party manufacturer, but this is actually coming off of Tonal. And Tonal is the connected fitness equipment maker backed by Serena Williams and Amazon Alexa Fund. And this is actually trimming now 35% of its workforce. This is important because it's not the only one doing this, right? We've been seeing the layoffs continue. This is, of course, after the companies are battling with slashing expenses and readjusting to the new kind of levels of consumer demand, especially after the pandemic run, right? A lot of these had those pandemic runs. They're trying to adjust to the new levels of consumer demand. And I mean, of course, in a time of recession, high inflation, you're starting to see these stocks just get really demand destruction. And that's causing them to have to adjust on their expenses. All right, let's go ahead. We're going to dive into our first interview. After the interview, we'll keep touching different headlines like Unity, some earning stocks like Fastenal and Delta, and we'll also touch some Twitter, Elon news. I know the saga is continuing there. And where is the owners of Three Arrows Capital? We'll talk about that. If you guys know, I think their lawyers are asking also, so maybe let us know. All right, let's go ahead. Let's play a little trailer of Benzinga Pro, and we'll be right back with our first guest.
Introducing portfolio synchronization with your brokerage. Now you can securely connect your brokerage account to Benzinga Pro, opening a world of personalization. Screen lightning fast news just for the stocks you own. Set alerts for news catalysts that affect only the companies you care about. It's all possible with a simple click and a secure protected connection. Overcome uncertainty and connect your portfolio to Benzinga Pro today.
All right, guys. So you guys might have known me in a time where I was a part of another show here on Benzinga, which was none other than the SPACs attack. And we're going to go ahead and bring on Patrick here. He's the CEO and CIO of RiverNorth Capital Management. How we doing, Patrick?
Good. How are you? Thanks for having me.
Excited to go ahead and dive into an area that I used to know really closely, which was SPACs. And one of the things that I will announce to everyone out here, RiverNorth Capital Management and TrueMark Investments yesterday announced that the launch of the RiverNorth Enhanced Pre-Merger SPAC ETF, the ticker is SPCZ, trading on the New York Stock Exchange. First thing I want to dive on into something a little bit more overall here. How do you feel about the CPI data and the recent downturn, and how will this affect the SPAC market?
Well, I don't think there's necessarily a direct correlation with the CPI and obviously SPACs. And, I think it's important to know when we think about SPACs, we think about them as only at the trust stage, right? When there's cash sitting in a trust versus obviously a lot of the SPACs that are already gone through that de-SPACing process. Those are publicly traded companies. And so, depending on what industry they're in, they might be more affected by inflation numbers that are out there. But, we think as a SPAC investor investing only in the SPACs that have cash in their trust, there's not going to be much of an impact at all. That said, will interest rates and short-term rates continue to increase? That's actually a positive for SPACs because the cash sitting in the trust will actually earn interest income. So the investors will be benefiting from that while they're searching for a company.
Perfect. Now, how do you feel right now, pre-deal SPAC environment? How's it looking? And why now for the ETF?
Yeah, good question. It's a little contrarian, right? All the headlines that are out there, it's all negative regarding SPACs. And again, our focus at RiverNorth is investing in pre-merger SPACs. So those that have not gone through that de-SPACing process. And so, given that the sentiment has changed towards SPACs and the oversupply of SPACs are trading at discounts to that trust value, the cash sitting in the trust. And so we find it very, very compelling and attractive today to own a portfolio of SPACs because you can own them at roughly a 2 to 3% annualized discount to that trust value. And then on top of it, you're earning that interest income, as I mentioned before. So we find it very compelling, especially looking at it as alternatives to traditional short-term fixed income or even longer-term fixed income. You're earning an attractive yield, but you also retain that equity call option, right? If they do come up with an attractive announcement, you have that option where they can trade well and trade a premium to their trust value.
Now, one thing that I'm starting to see is we have seen recently a little bit of the slow up of these deals. Are you continuing to see that in the SPAC space?
Yeah, and I think that's more of a normalization, right? 2021 and in the beginning of, the late 2022, 2020, that was not a normal market where the number of issuance was just, it was tremendous. And that oversupply is, again, that's resulted in the trust and the SPACs trading at discounts to the trust value. We think we're more in a normal market. We still have had a lot of issuance year to date in 2022. But, that has slowed down to your point. And I think, will we be in a market where there's probably 20 to 30 issued in a given year? That's probably more of a normal market. There was only 1 or 2 issued in June of just last month. But we're going to see, I think, more of a normal market, especially as the number of SPACs continue to mature. You're going to see a wall of maturity in the first quarter of 2023, and as that oversupply burns off, I think you're going to see just a normal pace of SPACs coming to market.
Now, I want to ask you, how did you feel about the Bill Ackman turning around and not finding the deal there?
Well, I mean, obviously he went through a handful of trials and tribulations with his SPAC, and obviously there was a lot of headlines surrounding it. It's not that surprising. A $4 billion SPAC, that is a very large SPAC to find an acquisition of size. And then you put the backdrop of capital markets today, it's frankly weak, and he's running up against the clock. So what would be even worse is for him to force a transaction, force a merger with his SPAC. And I think, from there, that would obviously just be long-term negative versus might be short-term pain where he didn't find an attractive acquisition, but that was just, bad luck as far as timing goes in the capital markets.
So what's going on with Chamath and IPOD and IPOF? It's still on my radar. Do you think a deal eventually gets done?
Yeah, and that's what's interesting. I mean, some of these well-known SPAC sponsors, as Chamath and Ares and Fortress and KKR and Apollo. I mean, all these names, these are well-known SPAC sponsors, and they're all trading at discounts to their trust value. On top of it, the warrants associated with those SPACs are trading at very low prices. So investors today, again, can get access to some of these well-known sponsors pretty cheaply. And frankly, the downside is you buy it at a discount and they don't get a deal done, right? And then you get the capital back that's sitting in the trust. And it's still a better return than a fixed income alternative. But yet you retain that option that they do find an attractive acquisition. But again, I think most important is ultimately the backdrop of the capital markets and what's that going to allow them to do to find an attractive acquisition and come to market at attractive terms and attractive valuation. And that's really, out of the control of a lot of these SPAC sponsors. Unfortunately, I think the SPAC market gets thrown in with just the general capital markets and saying, hey, excluded from the general capital markets, and it's saying it's just the SPAC market that's going through this negative time, but it's really associated with the general capital markets.
Last thing I'd ask is more of a question towards SPCZ. Do you guys include warrants in here?
We do. Yeah, we will own the common, we'll own the units, we will own the warrants. And that's, we typically, given the name, it's obviously a pre-merger SPAC. We're only investing in the pre-merger. That said, the warrants would be one unique characteristic that obviously we may retain post the merger, because they can become more valuable as they get closer to $11.50 strike price.
Well, thank you for coming on today, Patrick Galley, CEO and CIO of RiverNorth Capital Management. Check out SPCZ, guys. It just started trading yesterday on the New York Stock Exchange, and we'll definitely have you back, Patrick.
Thanks for having me. Take care.
All right, let's go ahead. Let's continue with the headlines. Let's take a look at the other headlines for today. Unity is next. I talked about that one. Let's go and start diving in. In a second, we'll also touch the earnings stocks today. Unity announcing a merger agreement here with ironSource. So I want to take a look at Unity, see how it's performing on the day, and you guys can see it. Boom, it's taking a hit hard here. We'll have to take a look at what goes on in Unity software, but it's down to 32.76. Let's take a look at the daily. You can see here, you had a couple of bottoming. You look like you were coming back, and boom, it's getting hit hard right now. We'll see if it can hold on to 30.25s. That's kind of the low that we have around here on the close. We also have down to 29.09 if you want to take a look at the furthest down action there. But Unity stepping in here. They had a couple of news also. So they announced the merger agreement with ironSource. That was approximately a $4.4 million deal. And then they also came on in and brought some more news in here. They brought in and they started talking about a share buyback program of about $2.5 billion, but they also reduced full year 22 revenue guidance. It was at 1.35 billion, 1.42 billion on the high end, and now is moving down to a 1.3 billion and 1.35 billion, as they used to have a 1.47 billion estimate. So definitely you're seeing the guidance get reduced here, but giving you some positive with a buyback program. Longer term, I'm sure the merger is to help the business, not to hurt it, but that will definitely bring the price down, with especially also a weaker guidance. It'll bring a stock down here. So we're seeing definitely Unity get a hit here. Let's go take a look at some of the earnings stocks as we get out of Unity software. But with Unity, I always pay attention to stocks like Snow, and I always pay attention to Roblox. They usually trade a lot of the time right hand in hand, and you can see they're down right now, but nowhere near the way that you're seeing Unity, where it's down towards the low of the support on the daily. All right, let's keep going. Let's go to Fastenal here. You can see it's getting hit hard here as it keeps declining after the pre-market kind of drop here. Why did this happen? Let's go ahead. Let's talk about that. The Q2 EPS here coming at 50 cents in line. Sales missing here at 1.78 billion, missing the 1.79 billion estimate. Mortgage applications also dropping to purchase a home, fell about 4% for the week, and we're about 18% lower for the same week 1 year ago. And so you can see here, it just looks like it wants to just cut down here and cut through the 47. We'll see if it can continue down there. And where's the next stop here for Fastenal? Let's take a look here on the weekly, see where we can see some support come into play. And I see it down here closer towards the 43s. So that could be the next level down here, going towards the 200 SMA on the weeklies. We'll see if it can get down there. It's definitely getting hit hard today. Broke through the support of 48 and continuing on the downtrend. And this looks like it's just wanting to break here. We'll see if it breaks by the end of the day, breaks that 47, and continues to the down end. Let's go to the other earnings stock. Let's go to Delta. Delta is definitely one to keep on watch, DAL. We'll see what happens here in Delta. They reported Q2 EPS here missing at $1.44, missing the $1.64 estimate. Sales were at $13.82 billion, beating the $13.4 billion estimate. They did post a quarterly profit. This a lot thanks to we'll give thanks to you guys out there spending the money and going on these expensive airline tickets. I mean, a lot of people just paid up, right? They can raise the rates and get around kind of the increasing oil prices and just try to squeeze out some of the margins. They did note that capacity is down still 15 to 17% from 2019 levels. So I'd keep on watch. When's the first time you hear Delta mention that it gets back to that capacity? That's why they're mentioning this number. They want to be able to say that they're back above 2019 levels, because this will start to take away the worry about the business travel, right? We've heard a lot that business travel isn't back to what it was. And if we could get back to those 2019 levels, they'll say, forget about the business travel. It's showing that overall airline tickets are in a kind of increase trend. We'll keep watch to see what happens in Delta and the other airlines. You can see here Delta coming down here after yesterday getting a little pop. I had a feeling that was an earnings pop into it. And of course, the number in the CPI data coming in and knocking this one right back down. Let's take a look how other airlines are doing right now, like AAL. American Airlines had a strong day yesterday, but of course, also coming down today. All right, let's keep going in the Twitter saga. What's going on in the chat? I see you guys talking about some stocks. What are you guys taking a look at? Appreciate you, Tom Nash, in the chat. Hey, trying to do my best to keep us in the informational edge, get to some experts, get through the headlines, and of course, keep you guys in the edge. Let's go. Let's take a look. I don't see too much there. Delta, Carvana, Airbnb, Expedia, all trading up on oil down this AM. Interesting to mention there. Let's keep going with the headlines. Let's go into the Twitter saga. The Twitter saga is continuing here. Let's take a look at Twitter. It's actually getting a little bit of a pop today. Twitter suing Elon Musk to enforce the original merger agreement. Twitter said Musk, after entering a binding merger agreement, now refuses to honor obligations to Twitter and its stockholder because the deal he signed no longer serves his personal interests. So, kabam, hitting you hard, Elon. Now, the important part here, I think, is to keep on watch as we're going to get into a legal battle here as Twitter seeks to hold Musk to his deal to pay $54.20 per share for the company. I think this is the important part, and why you're maybe seeing a lift today is the arbitrage kind of more pointing now that Elon gets stuffed there at that $54.20 pricing, and it kind of comes up a little bit, maybe making its way back towards the 40s. I think that, this is just going to be very hard to determine which way it goes. It's going to be a loyal battle. And when we have legal battles, who wins? It's going to be the lawyers. That's who will probably win on this, And so we'll see what happens there in the kind of Elon Musk and Twitter saga. I personally think that Elon should focus on some other business, but who am I to focus on what he can do with the data that Twitter offers? We'll see what happens there. And the battle is on now. Do the bots and that number win, or does Twitter win here and get their $54.20 per share as they're down towards 36 and we're down to like about 33? We'll see what happens there. All right, let's keep going. We'll see what happens. Looks like you guys are taking a look at some stocks out there. I see a lot of auto manufacturers being mentioned. So let's take a look really quickly at some auto manufacturing. I did talk about here in consumer cyclical, you can see auto manufacturing leading well. I also noted footwear and accessories, but let's take a look at some of these, like Tesla. Of course, auto manufacturer is up. I'm going to think Tesla's up good here. And so when you watch this, you can also take a look at some other names, right? NIO finding some lift, LI finding some lift. And if you take a look at LI and NIO, you're going to see some similarities. They trade really similar. That's why I always kind of keep those on my radar. XPEV, LI. Look at XPEV and LI. Very similar charts. So even NIO is very similar to that XPEV. I always say that, at least from my data that I've taken a look at and I've compared these before, NIO tends to lead. XPEV tends to be in the middle, and LI seems to lag the moves. Sometimes you'll get LI to kind of lead, but it's usually the laggard in the China EVs there. We'll see what happened in some other names too. You saw Fisker up today. So it looks like the auto's having a good little bounce back. Will this continue to kind of get the lift? Not really, at least in my eyes. I just don't see EV being the narrative that we're talking about in the next month or two. It's more talk of recession. It's more talk of kind of inflation, supply chain issues. We've heard countless times with these auto manufacturers. So I'm staying away from this move, but to each his own. If you guys think this bounce back can last here in Tesla and we can get back through, let's say 750, yeah, it won't look too bad. But for right now, I'm still bearish on auto manufacturing and the overall industry. All right, let's go ahead. Let's pull that down. Let's keep going. Let's get into the next subject here. I want to talk about, let's go towards, we could talk about, Three Arrows Capital. Don't mind talking about that. Let's talk a little bit about what's going on. And do you guys know where in the world these owners are? Zhao and Davis are really currently unknown right now. A federal judge in New York bankruptcy court has frozen the remaining assets of the once prominent, and I wouldn't really use that word, but crypto hedge fund Three Arrows Capital. At one point, this fund had $10 billion just a few months ago. Yeah, $10 billion in assets. A key part of this motion now is focusing that the liquidators are now controlling the debtors' assets at this stage. So they're taking over those assets. That's why they froze the remaining assets. A main reason why this is happening is for the aggressive action is because they don't know where these founders are. And according to lawyers representing the creditors also allege that the liquidators in Singapore found that Three Arrows Capital, the offices were vacant. There's nothing there. There was just a few inactive computer screens that they found when they went into the office. So I'll ask it again. If anyone knows, please reach out to the lawyers of Three Arrows Capital because they're on the search for them. And like the chat says, I don't think they're going to find them, but we'll see what happens. Let's keep a watch on the Three Arrows Capital and how that situation keeps moving forward. Of course, this is going to affect Bitcoin overall. In my eyes, this is why Bitcoin is a no touch right now, because I'm going to continue to watch how these situations develop. It all started with Celsius and kind of before that with Luna and the stable coin turning into what? Unstable. And so with that being said, I am avoiding crypto right now like it's the plague. Reason why is I think we still have a lot of downside action here that could come with worries and concerns of investors after reading comments like this. If a hedge fund with $10 billion is completely disappearing and you can't even get the founders to show up in court, what's to make you think that any of these companies in the crypto space have any loyalty to their investors? I think that's important. As any investor out there, you want to at least know that you're going to be able to recoup your assets and they not get frozen in New York bankruptcy like what's going on right now in Three Arrows Capital. We'll see what happens with that. It's definitely a situation that I'm waving the red flag. I've been waving the red flag in crypto for a while. And I just hope that people are being safe with the money they probably invested into cryptos. I'm not saying that it's a waste to invest in cryptos by any means. I do think Web3 in the long run, blockchain technology is going to be massive. But the question is here, can you hang on to the downturn? And how far will this downturn come? And how long will the crypto winter last? So this is why another reason why I think the markets could continue down also following Bitcoin, as you're seeing more and more concern from investors out there. Where can we find a return? We thought for a while it was in some of these crypto names like, and I'll mention it, Voyager Digital, giving out, I think it was 9% or something like that. And this is where the worry really comes in. We need to really kind of focus on these crypto business to get that return on capital and it be actually consistent before you probably see that next wave. But we'll see what happens. No expert there, but going to keep watch what happens in crypto. You guys know my level on Bitcoin. I'm looking for a move below 10,000 so that I can join the party, which I don't mind, but it's going to be at the right levels. All right, that is scary. I agree it's scary. I mean, it's just getting to the point where, there's just too many of these. And to me, that just shows that I don't want to be taking part of that. It's like thinking about making all your investments in China after you keep hearing kind of moments where regulation comes in and just knocks it down. All right, let's go ahead. We'll get out of the Three Arrows Capital. We're going to get into our next interview in a short minute here. We're going to start talking about some MMA action. What's going on out there? Are there a lot of deals or not? We'll talk about that coming on up. Let's go ahead. Let's get into a little trailer here, and we'll be right on back with our next guest.
I tell all my CEOs, this is a very, very, very important platform. And look, all the other platforms are important too, but you're up there now. You're way up there.
Best investments you can do in your future is actually go and re-educate yourself on credible sites and credible resources like Benzinga. I think you guys have been killing it.
The comment section on this show is remarkable. Like the quality of the combo, and just big shout out to you and your community.
That's what I love about you guys. You just had all your callers in right then. And it's all about the community here at Benzinga.
All right, let's bring on Tom Donnelly here, CFO of Datasite. Let's go ahead. Let's dive on in. Welcome to the show, Tom.
Thank you very much. Nice to meet you.
Excellent. First, tell me a little bit more about what Datasite does.
Well, the tagline would be, we enable the deal-making community. We make SaaS products, software as a service, cloud-based products, to make the deal-making process more efficient and effective, and more importantly, since COVID, virtual. Just like we're doing an interview over a cloud-based SaaS product today, those are the sorts of products we provide for corporations, the private equity community, investment bankers, lawyers, and other advisors, to get deals done, whether they're M&A deals, whether they're IPOs, whether they're managing bankruptcies, financings, pipes, a wide variety of different use cases of folks using our platform.
Okay, so you're an excellent person to ask. What kind of trends are we seeing in MMA right now?
Well, we see a different lens than the market sees, because we're usually engaging on a transaction 6 to 9 months before announcement. And also more and more transactions these days are never announced. I think we all know last year was a banner year in M&A, but through the first 6 months, we're still up on our new project starts just under 10%, and still seeing very healthy revenue growth through the first 6 months, coming off a 33% growth year for the company. So we're encouraged, but we're watching the same signs that our customers are watching, which is the Russia-Ukraine war, the inflation, and interest rates. And I think overall that translates into uncertainty. And I'm sure we all know that the market never likes uncertainty. So
I don't think anybody does. If you're a person that likes uncertainty, you should definitely look into trading. But let's talk about what deal makers are really having to talk about, that Russian-Ukraine war situation. Are you seeing it brought up, and how is it impacting these deals?
Yeah, I think it's certainly, at a high level, while our deals are up, I think the anticipation is valuations are down. And in many sectors, the geopolitical uncertainty and also the supply chain disruption in general is causing buyers to sharpen their pencil. Deals are taking about 5% longer based on our data to get done. So due diligence levels are higher, and certainly in those sectors that depend on raw materials, transportation, et cetera, because you can have exponential negative impacts, on your margins, on your EBITDA margins, if your cost to produce products is going up at the rates some of the sectors around inflation are being impacted by. So that's it from a high level. I think it's just more uncertainty. The flip side of that is we've actually seen an uptick in industrials and defense-related M&A activity, and not surprising, in tech, cybersecurity. Those have been very active markets, and I would correlate those almost directly in every case to the crisis overseas. One, because we and the West are supporting Ukraine, right? So that's good for the defense industry, obviously. And industrials tend to be more stable, more EBITDA driven rather than growth driven companies. So a little less, in certain cases, beta in the valuation. And cybersecurity, again, is, everybody is hardening their technical infrastructures around security because of the threat that has really been brought to light by the crisis.
Definitely. Now, one thing, of course, we've been seeing the Fed kind of increase the interest rates. Do you feel like we're getting more deals that are based on equity because of this? Or do you feel that we're getting kind of more of the cash deals right now? What do you see?
Yeah, the deal-making community, when we surveyed them, not only they did expect an increase in deal flow in the next 12 months, but certainly see larger equity checks as a general rule versus debt financing, which is going to change kind of their calculations when it goes into what sort of return, because they're going to have to drive better performance or some sort of transformational change in the assets that they're buying in order to meet the hurdle rates they set up for themselves, in particular private equity, in order to deliver to their shareholders. So bigger equity checks for sure.
Something that I've been looking to see is if we're going to get some MMA out of kind of recent. I have been seeing a lot for a while. We've been getting tons and companies coming out about sports betting, right? And so this is an area that I'm looking to see if we're going to get some consolidation. You've mentioned industrials and technology. Of course, it would probably fall into that technology. But is there a certain industry that you're seeing potentials come out of? More potential?
Well, I think when I look at the recent past, I think I already mentioned cybersecurity is a part of the TMT space that has been particularly active recently. The flip side of that is a lot of TMT. There's deals, but there aren't a lot of deals getting done, and that's because the valuation gaps. I don't know if they're the largest, but the recent move in the markets for technology, by recent I mean last 6 months, have been most pronounced in technology. So I think, having been in and around this market for quite a while, it takes some period of time when valuations reset until you see kind of the lagging transactional announcements come that adjust to the new valuation reality that at least we have today in the market. Having said that, some good news here or there, as we all know, can make markets move pretty quickly. And I've never met anybody that can pick the bottom. I don't know if you're the guy, but
hold on, it's right there. No, I'm just playing with you. Playing the hero. I don't think playing the hero has ever worked for me. I don't know about you, Tom.
No, I'm not going to pick the bottom. So
yeah, we're no Supermans here. So
we're probably closer than we were to the bottom, but don't know where.
Hey, well, thank you for bringing us the insights into MMA, and we'll definitely bring you on to discuss some more data. Guys, check out Datasite, and definitely appreciate you coming on today, Tom.
Okay, appreciate it. Take care.
All right, we could go ahead and continue with the show. We're starting to wrap on up. I did see a question in the chat that I want to go ahead and address. Someone is asking me about ARDX. Like always, I can't give financial advice, but I will take a look at the tickers for you. Let's go ahead. Let's take a look here. RDX. So this is definitely a cheaper name. I feel like I've talked about this one before. The big thing that you're looking to see is that a lot of times these like to do what I call the dollar run, right? And so cheaper names that are in the penny stocks, they'll do this often. Like you saw here, where the stock ran up there towards about $1.70 and then came back. That was in the December period. But look how this falls off the tape also. It goes from 174 all the way back down to 58 cents. That's about 65% retrace, right? And so you got to be careful with names like this. The stock comes back up from that level, and then what does it do? It gets to $1 again, but doesn't even get that high anymore. It closes around 119 and can't hold up there towards the next levels. Then what do you get a little bit later? A decline right back down towards below the dollars. It's about a 40% retrace this time. Then you get a pop up. It can't hold $1 again. It comes back down. It's trying to maybe go back towards that dollar. I don't have an outlook on saying that this wouldn't go back to $1. But one thing I would definitely say is be careful, because a lot of times these stocks pop and then they can't continue the run. One thing that does help it is the 50-day moving average is below it on the daily. So I would look for, these kind of 60 cents to hold now and continue to drive. But the biggest thing that I would be looking for is if once I get towards that $1, what am I doing? What's my decision? And am I going to keep holding this? Because you can see every pop in this stock has pretty much failed. Even in the past, you've had some pops, but it's failed. Pops, but it's failed. Pops, but it's failed. Pops, but it fails. When a stock has that, I'm looking for it to change trend. Get out of that first. If it can't change the trend, then that's not what I want to be trading. But like always, you guys determine your own risk assessment and if this stock is for you. All right, let's go ahead. We're going to start wrapping on up. What's going on? I'm glad to see some new faces in the chat. Please do me the favor, guys. Like it on up if you guys like today's show. I've been working really hard on this one. The biggest part about this show is to try to keep you guys in the informational edge. Bring on 2 experts daily. Yesterday, we even had 3 experts on. So I'm going to keep trying my best to go ahead and cover all the news that I see out there and anything that is stock market movers. If it's moving the stock, we'll go ahead and cover it here. All right, that's going to do it for us today. It's about 1:54, so I can take some stocks from you guys if you guys want to cover something now. But I'm going to be watching stocks like Walmart, right? It's coming on back. It stopped me out yesterday, so I do want to talk about that. Got stopped out in the swing trade yesterday, but it's trying to come back up and fill the gap. I'm going to keep these on my radar. A lot of defensive names moving up today also. Beverages, TAP. We talked about this move yesterday. It looked strong. It looked like we were going to make that next leg up to 60. We got up to a high today of 59. Let's look to see if TAP can continue running. And does this start affecting other stocks like Bud? You're seeing it trying to push through that 55. We'll see if they can catch that bounce. You're also seeing Sam trying to push a little bit back there. And this is, of course, in beverages in the brewers. Grocery stores, what's going on there? You're seeing Sprout get a little bit of a lift. KR, after a big pullback and filling in some of these shadows, it doesn't look too bad there on KR. On the weekly, you can see here, every time it's pulled back to that weekly support, it's found it and kind of bounced here. I'm going to have to keep this one on my radar. We'll see when it gets back up through the 50s, but not a bad one to keep on watch. Lately, this has been a decent mover, and you guys know Warren Buffett also owns this. Let's take a look at Oxy, the other Warren Buffett stock, right? Does oil come back or not? I think a lot of people are kind of keeping their eye to see what happens in energy. Energy had a strong day today. You can take a look at it by using maybe Gush. Gush is, of course, a leveraged bull. It's 2x, and you can see here how it's continuing to push. We'll look to see if it can get through that 118, and for that being mentioned, XLM trades very similar. Look for this to kind of close up above 86. If we do get a close above 86, this is going to be looking good on the chart. All right, that's going to do it for me. I hope that you guys are ready for what's coming on next. Of course, it's Wednesday, so we'll get you guys over to some roadmap action. What are they going to be talking about today? Are NFTs worth it? You guys talk about it. Let me know what you guys think. Come on over to the roadmap. I'm going to actually do a favor, guys. I'm going to go on over also to the roadmap, and I want to see you guys talking about what you guys think about NFTs, the crypto space right now. Is this a time for opportunity, or is this a time to say, nope, I've had enough and I'm seeing my way out? You guys go ahead and tell me what you guys think on the roadmap. Smash the like. I'm going to go ahead and get on out of here. Another episode of Stock Market Movers, and I hope that you guys enjoyed today. We did touch a lot of topics. We're going to go ahead and review here. We talked about the stocks bouncing on CPI data. What is going on? Now what for the Fed? What do they choose? Nike, Tono, Peloton, Unity, Fastenal, Delta, Twitter, Elon Musk. And of course, we also talked about the Three Arrows Capital situation. We had two experts and all that in 1 hour. So let me know by giving me a like, and I'm getting on out of here. I'll see you guys on At the Close. That's at 3:30. But for now, let's go talk some NFT action.